Welcome back to Storm Stock Solutions. I'm Grant Mercer. The closing bell has just sounded on Wall Street, and today's tape was all about tension building under the surface. Big tech facing an AI reality check, airlines getting slammed by weather and reputational damage, and investors quietly shifting their focus toward tariffs and the broader economy. Let's start with the macro backdrop, because that's the canvas everything else is being painted on. According to reporting from MarketWatch's Vivian Liu Chen, markets are increasingly pricing in the idea that the Supreme Court may eventually strike down parts of former President Trump's tariffs. That's taken a little of the trade war fear premium out of the market and put the focus back on whether the US economy can simply keep grinding along. In other words, if trade headwinds ease, it's no longer about tariff headlines day to day. It's about growth, jobs, and demand showing up in the data and in earnings. On the downside today, the big question mark hanging over the market is AI spending. MarketWatch highlighted that investors have made a massive bet on the Magnificent Seven's generative AI build-out, and we're now heading into an earnings stretch where we find out if that spending is actually paying off. The key theme here isn't just revenue growth. It's whether all those billions in AI capex are translating into higher margins, real productivity gains, and durable demand. If those numbers disappoint, you could see a sharp reassessment of some of the most crowded positions in the market. So big tech isn't exactly breaking down, but it's an area traders are handling with a lot more care as they wait for hard numbers rather than just the AI story. Another clear weak spot today, airlines, with American Airlines squarely in the spotlight. MarketWatch reports roughly 10,000 flights canceled, a $200 million hit tied to the storm, and a stock that's been under heavy pressure. The story notes that American is not in a position of strength as a business to absorb both the financial and reputational damage here. That combination, operational disruption, balance sheet stress, and brand hit, puts the broader airline group on the list of themes that look fragile right now. Traders will be watching whether this is an American-specific problem or a warning sign for lower-margin carriers across the board. Now, in terms of leadership, this was not a classic broad-based green screen kind of session, but there are some quieter sources of strength showing up in the background that are worth flagging. One is the rotation into new momentum pockets outside the mega-cap tech complex. MarketWatch's Michael Brush highlighted a batch of new momentum names gaining steam as big tech cools off a bit. We're not going to list tickers here, but the takeaway is important. When leaders pause, money doesn't necessarily leave the market. Often it looks for the next group with earnings visibility and technical strength. That's a theme traders are watching closely into the back half of earnings season. Another under-the-radar angle is the consumer trade down, or maybe trade up in select categories. Reporting from Bill Peters points to diaper wars going deluxe, with Procter & Gamble's Pampers and Kimberly-Clark's Huggies shifting from price wars to premiumization. That tells you two things. First, these consumer staples giants believe a slice of shoppers still has the wallet to pay up for quality. Second, they're trying to protect margins in a world where input costs and promotional pressures remain real. How that plays out in volumes versus pricing will be a key tell for the broader consumer staples space. Sticking with the sleeper themes, there are a couple of stories that don't move the indices today but could matter more over time. One is the new Trump account concept, tax-advantaged accounts for children that the IRS is now laying the groundwork for, as reported by Andrew Keshner. Contributions can't start until July, but the fact that the infrastructure is being put in place signals another structural policy-driven nudge toward long-term savings. That doesn't swing today's market, but over years it can shape flows into certain parts of the investment universe and is worth having on the radar as a policy-driven watchlist item. Another sleeper is the continued fascination with big trend stock pickers, like the MarketWatch profile of a manager who rode Nvidia and GLP-1 weight loss drugs early and is now looking for the next big waves. The broader takeaway there isn't to follow any one person's picks, but to recognize how much capital is chasing thematic stories: AI, obesity drugs, reshoring, premium consumer niches. When positioning gets that concentrated in themes, the reward can be big, but the air pockets can be too. We also saw several personal finance and behavioral pieces trending: how to avoid revenge trading and the risks of loading up on your employer's stock. Those don't move the S&P on a given day, but they do speak to something important beneath all this volatility: discipline. In a market where AI narratives, tariff headlines, and weather shocks are flying around, the investors who keep their emotions in check and avoid over-concentrating in one name, especially the one that pays their salary, are often the ones who survive the inevitable drawdowns. Looking ahead to tomorrow's session, the playbook is fairly clear. On the macro side, traders will be watching for any new signals around trade policy and how that feeds into growth expectations, the dollar, and rates. On the micro side, it's all about earnings from the big AI spenders and whether they can validate the capital they've poured into data centers and model development. Layer on continued scrutiny of travel and leisure names after Americans' rough week and potential follow-through in those new momentum pockets. And you've got a market that could see sharp rotations even if the headline indices don't move dramatically. We'll dig into all of that in tomorrow's pre-open update, where we'll set the table with futures, overnight headlines, and the next batch of earnings on deck. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer.